India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's three guys here, as you can see. So to start the day, Mangalam is with us, joining us on the program. We're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, as always, my colleagues Nigel and Mangalam as well. Guys, morning.
Good morning. I think, it's the middle stump, leg stump and off stump today. It's India versus US in the evening. So that is something that we'll be watching alongside what the Fed does.
I think it's going to be an interesting one because 2 days in a row now the markets have kind of done nothing, consolidated. Actually, that would be wrong to say that it's done nothing because the broader market has been just absolutely vibrant. So let's just quickly start by telling you what you need to know. Yesterday, another day of consolidation. Like the day before. And that's largely on the back of a runaway move that we've had over the last prior 4 to 5 days, right from the Tuesday lows. So, to be expected, but, it was always also the fact that the market actually sold off starting about 2:55, 3 o'clock. Otherwise, we started 2:30 with 120 odd point gain in the Nifty, and then there was a bit of drop off which happened. Overnight is positive. Nasdaq is up almost 1%. It's supported largely by US yields. US yields had hit about 4.5%. They've cooled off a little bit. The 10-year down about 7 basis points. The dollar is steady, no large up move, but is holding about 105 plus, actually 105.27 or so in the dollar index. And oil prices, they're creeping higher. Not a large move like the day before, but a 0.5% move. We're back at about $82 a barrel. Tonight is essentially the big data points. You've got the US CPI and then, of course, the FOMC. If you sort of read the expectations out there, it looks like, the Fed chair press conference, although the recent jobs data was actually, stronger than expected, and that triggered this big up move in yields. But there is a plethora of other high-frequency data which indicates that indeed, even though the headline number out of the monthly jobs data is showing that the job market is still hot, otherwise, the labor data is cooling down. So I think that should be reflected in the press conference. We've seen that over the last 2 times when the market expected the Fed chair to once again react to near-term data, which was hot, and he did not. He said, well, let's look ahead. So, that's essentially where we are at. But that's only later today, and the market will react to all of this tomorrow morning. Now, just to sort of circle back to levels here, for the Nifty, I think it's possible we perhaps see the bias is to try and buy the dip and sort of look at stock-specific opportunity, etc. At the index level, you've got to be careful because the supports are nearby. 23,050 is the first support level, which is the 40-hourly exponential average, and then the 22,900 level, which is the 23.6% retracement of the recent move higher from the lows of Tuesday. For the, and of course, on the up move, we know you need to take out the 23,400 levels, which will indicate a fresh up move. On the Nifty Bank supports the 40-hourly again, 49,469 and then 48,900. Broadly, these are ranges. On the way up, the recent high, which is 50,253, will be eyed. By the way, locally as well, we've got some data, which is, of course, the IIP and CPI numbers. The CPI number especially should be important because there is also more recent. The IIP, of course, is for April. And the other thing which is starting in a very fast manner is, of course, block sales. Yesterday, we had about nearly 6,000 crores of sales from promoters and early investors. And as Nimesh yesterday pointed out on his D Street Chatter segment, there is more coming. Names like, I think, Kalpataru, Indus Tower, and many more lined up over the next many weeks. So, in terms of single stocks, I think you should expect this action to only heat up. Otherwise, possible the GIFT Nifty will come up on your screen, but it's possible that we get some more consolidatory kind of price action. 12 or 13 points lower is what the GIFT Nifty is indicative of. Guys.
Well, that's right. It's a flattish start that we're working with. And just to highlight the big cues that we're watching for today's trading session, on the global front, we're looking at the inflation print. We're also looking at the outcome of the FOMC and what the commentary will be. And on the domestic front, the Nifty Bank, the expiry will play out the weekly expiry. So that's an important cue. What else happened in the last 2 trading sessions? Well, the Nifty is seeing some bit of resistance at around the 23,450 odd. Because both the days we went closer to around the 23,400 and we came off the high point of the day, 125, 150 points odd. So there is some resistance at higher levels. What did the FIs do yesterday? They added 15,000 long contracts. They covered close to around 3,000 short contracts odd, which brings down the short positioning. Remember, we started this series with short positioning close to around 3 lakh contracts. That's come down drastically. And if you look at it in percentage terms, well, from around 87%, now, in fact, you have the short positioning. That's that's come down quite a bit. So that's important as well. Let's pull up the absolute number. The net short positions of the FIs, well, that's come in at around 1.26 lakh contracts. At the start of the series, this was around 3 lakh contracts. So there is a bout of short covering that's taken place. On the client side, you have their long position, which was at around 3 lakh contracts, that's come down to around 80,000 contracts odd. So some part of that long unwinding and short covering has already taken place. The index to watch in the second half of trade will be the Nifty Bank. It's being seen selling at some higher levels. So we'll keep an eye out on that. Even yesterday, it went to around that 50,000 and came off the high point. On the Nifty side, the options data I'm looking at 23,200. The put was fairly active in trade yesterday, which gives us the level because the premium has come down to 85 rupees, but it was at around 200 rupees. So you deduct it from there. Options data suggests that's the crucial support. Otherwise, you're looking at the 20 DMA out there. And in terms of resistance, options data suggests 23,600. That's a bit of a resistance level. And the recent high, 23,400, that'll be the first level. So those are the levels you're looking at. I expect some bit of consolidation, but broader market action to continue. Mangalam, what else are you tracking?
Absolutely. Consolidation is on the cards, and nothing tells consolidation better than the way India VIX moves. And that's the one index that I've been looking at over the last few trading sessions. The India VIX actually yesterday closed below the level of 15 and it fell 10% yesterday. When all events are typically out of the way, the VIX trades anywhere between 12 and 14. But now because we have the imponderable of, the US Fed FOMC meet outcome as well, which is what implies that the India VIX is a little elevated versus, what we had seen earlier. But in any case, it's down 53% from the June 4 high of nearly 32, and it's the lowest level that we've seen all the way since May. Now, VIX is usually an implied calculation basis the prices at which options trade. It is not an input to get the prices of options. So when the VIX is lower, it implies option prices are lower, and option prices are typically lower when more options are written. When are more options written? When the street expects a range-bound index move. Secondly, when are more puts written? When the street expects supports at lower levels. So lower the VIX, it means that the market would perhaps be in a range, and at the same time there would be support at lower levels because the implied volatility of puts is inherently higher than that of calls itself. What is it that can move the market out of the range? The first thing is the Nifty Bank. Like Nigel pointed out, the second half will be extremely crucial. We have the weekly options expiry playing out, but it's facing supply above 50,000. In the last 7 sessions, the Nifty Bank has crossed 50,000 intraday thrice, but closed above it just once. That was on June 3. And even the other days, when it moved towards that 50,000 mark, it fell off from those levels. In fact, yesterday as well, we went within 30 points of the 50,000 mark. So 50,000 call has nearly 30 lakh shares outstanding, which expire today. And for today's contract, the put call ratio on the 50,000 strike itself is sub 3. So a lot more calls written than puts. So can the Nifty Bank surprise on the upside or not is the first, thing that can move the market out of the range. The second thing will be the IT index. The IT index will lower this week on account of one, stronger than expected US jobs data, and secondly, obviously, profit booking as well. So all eyes on the Fed commentary today, then the US CPI. If those factors could move the IT index and global facing stocks, then maybe we could see some bit of move outside of the range that we're looking at. Prashant.
All right, well, Mangalam, thanks for that. Let's quickly tell you some of the views we are getting from market men. This is Surendra Goyal of Citi who weighs in this morning. He says Indian markets have fared well in June so far despite a narrow victory margin for the BJP-led NDA versus the exit polls expectations. Notably, he adds, defensives have outperformed cyclicals and domestic mutual funds and retail continue to be the net buyers. He says MSP announcement and union budget will be the next key data points to watch out for. Policy continuity on infrastructure, clean energy, domestic manufacturing, defense and electric vehicles with increasing focus on rural welfare jobs is something he looks forward to. Their June 2025 Nifty target is 24,400, which means a 5% upside from current market levels.
Right. We also have another equity call coming in from Sanjeev Prasad of Kotak Institutional Equity saying that the unexpected market reaction, sanguine to an unexpected result in the 2024 national elections, BJP falling short of majority, that is highlights the unusual nature of the Indian market. He says non-institutional investors remain extremely confident about making high returns from the Indian market, irrespective of prices and valuations. He adds that institutional investors can choose to fight, flee, or join.
Okay, well, that's an interesting way to put it. Let's get you some money market views as well. This is Kunal Sodani of Shriram Bank, who says that stronger than expected US data and political uncertainty after the French president called for snap elections pushing the Euro-USD pair lower in turn has pushed the dollar index higher. He says oil demand and rising crude prices are further adding to the rupee weakness. Strong US labor market data makes Fed rate cut a distant happening. He adds US CPI data will be important to watch for with headline inflation expectations to be at 3.4%. Kunal adds there remains a competition between dollar uptick and central bank intervention for the USD-INR pair. The range, according to him, is should be around 83.4 and resistance around 83.72.
On the bonds, Ajay Maglulia of JM Financial says that the market is awaiting CPI inflation print today, as that may be a bit higher than last month due to higher prices, but sentiment remains upbeat and stable despite close to neutral liquidity in the system. He expects the 10-year benchmark bond yield to trade in a tight range of 6.99 to 7.03 for the day.
Well, we have a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. But we look at HCL Tech, Go Digit General Insurance, TVS Supply Chain Solutions, Tube Investments, GMR Airports, Camden Fine Sciences, Toll Industries, as well as Wipro. All of them will be reacting to positive news flow. On the flip side, you have MTAR as well as ACE that will be reacting to negative news flow.